unobtainium can come before you get the new price discovery. We've made calls on silver that you're going to have a pause in the 90s, and then you're going 330, and then we see 600, and then we see 4 digits. The point that might occur with that is you won't get a chance to buy maybe at 55, 65, and 70. You might have a complete whiteout, call it a gap, and there's no buying, and the next open market discovery will be at the 90s. There'll be a little bit of trade, it'll be gobbled up, and then pop, you gap again. So if you aren't investing and you aren't accumulating and you aren't physically holding, you don't get to trade every price in between. Markets can gap in extreme crises, and you will have little spots of price discovery and potential gap. So I wouldn't sit and listen to the people calling tops, all the psyop of everybody's rotating into Bitcoin. That clearly isn't true, and all the splurge of counter narrative. I would see it all as bullish and keep stacking robustly.
You're watching CapitalCosm. My name is Danny. It is October 23rd, 2025, and we've got a star-studded panel for you here today. We've got Eric Yeung and Francis Hunt. Guys, I'm so excited to do another one of these. We've done 2 so far. This will be our 3rd. So let's just dive right into it. It's a pleasure having you both on the podcast. Let's go and start off with Francis. As I usually do, ask each and every one of my guests what is most topical on their radar screen at this very moment. Go ahead and talk about gold and silver. Earlier in the week, we had a massive sell-off, probably, I think, the biggest candlestick sell-off in terms of gold since 2013, and the biggest daily candle sell-off in silver since 2021, I believe. Francis, what do you make of the current state of the gold and silver market? Is this just a correction? Looks like things are rebounding as we speak. Right now, gold's up 2.2%, silver's up 2.4% at $49. Go ahead and take it away, Francis.
So as an investor, this is an opportunity just to further add. So you're going to get on your X algorithm all forms of people telling you there's a major rotation into Bitcoin, apart from the fact that Bitcoin price has gone down, of course. And many others saying Bitcoin's never lost $1 trillion market cap, that it typically loses 70 to 80%, but that's never amounted to $1 trillion, because actually by scale compared to gold, it's not nearly as big. I mean, gold was knocking on the door of 30 trillion. $1 trillion market cap actually was only 6.4%, I think it was, in total drawdown. And in fact, I will share a chart and I'll show you the amount of times we've had a pullback of 6%. And actually, It's not such a rare event, and it's far from any great tragedy in terms of that. So let's share the screen and I'll show you exactly that. It is absolutely normal that should be happening. We were going up exceedingly quickly. If we just check that out, here we go. Let's put it on a weekly time frame. Let's turn the eye off. In fact, we can maybe go daily. Here's the amount of times you've had pullbacks, and you should be buying every pullback all the way to new highs. That's my take. I mean, this is recently. The pullback from Trump tariff tantrum when you ran 3.5 was actually 10.84 to the low. This one was a tiny bit more violent, impulsive. It's what I'd call a slap in the face, dish, out of the blue. And those tend to be very manufactured events often. You should be biasing to the bullish side on this, and you should be treating every opportunity to purchase. If I highlight this slot, so there's all the bear reactions. By the way, you're going to have bear reactions of 6%, 4%, 10%, from $2,000, in fact, from $1,100 if you go further back, all the way from 1980, 800 if you want. Ever going higher, you're going to have bearish reactions. So, good luck. This is an investment opportunity. This is a hammer right now. So if we just focus on the current price behavior after that, and I'll just turn off all these annotations a little bit to reduce the noise. This is 100% a hammer after a slap in the face. Let's just choose a little bit of a smaller line. That's a bit of a fat line. Do it again. This represents a hammer, and that represents bullish confirmation that's probably going to go up. So you're already getting a reaction against that slap that you got. And by the way, if we go to smaller timeframes, technically, it's again an opportunity that should be exploited. I'm seeing the possibility here of an inverted head and shoulders developing around about the 4150 level. You might get a bit of resistance for a bit of a shoulder here. Now, I'm taking mainly candle bodies. This did trade technically slightly lower than that, but that's quite acceptable to do. Might get a bit of a resistance maybe in and around the 4150, and then you go back up. You will be projecting, this scale back up into the ranges where you got attacked last time. You may again slow down and have a pullback. I think we could have a continuation pattern of winding up, ever lower highs, higher lows, until we get a squeeze in the volatility, and then we go again. That's what happened last time. It took all the way from April, from tariff tantrums, to September before that one broke. I think this one comes around a lot quicker because by time frame, it's a lot better. So these were all buying opportunities. Short answer, buying opportunities. What further asserts that they were buying opportunities? The gold-silver ratio hasn't even got out of the 72 to 92 range that we've been talking about. That will be the beginning of dominance from silver. That hasn't even happened. We'll also highlight that, talking silver, we suggested that as you approach the 50 level, that you will in fact get a pushback against silver. We've said once, twice, three times a lady. So I'll show you that on the silver charts as well. I don't want to take too long. I'm sure you want to give Eric's opinion on this, but we've been in this box range trade for an extended period. And you're at the low end of the range. So we haven't even begun to let go of the 80s aggregate handle. We're at 84 right now, 0.4, so 84 and a half on gold silver ratio. So you are at the beginning of this macro gold bull market. When we get to 30, you're in the mid phase. And then when we get that potential dip below 10 for a single digit gold silver ratio, that's when I start distributing some of my silver, not before. So this is truly, truly early doors. You need to be patient. This is a macro trade. We changed epoch into a capital preservation epoch, for which the sole reserve asset for surviving that are your precious metals complex. When the bond market turned in 2020, it took everyone else 3 or 4 years to realize that that was happening, and a 55% crash. And now everybody knows debt is no longer the thing. What's happening? America is selling gold to buy Argentine debt because of yield. Well, they'll soon find out what Tether found out, and they're going to need to raise capital to plug their gaps, and are now thinking of buying silver miners and gold miners. So that would be my opening statement. A lot more to say. This is early doors gold bull.
Excellent. Eric, I'll let you answer the same question. What's your current assessment of the gold and silver market, given the sell-off earlier in the week and the rebound that we're currently seeing right now?
Okay, so I got like some news from one of my Indian followers that just popped up today. I sent it to you. Can you put it up on your screen?
Yes, here it is.
Okay, there you are. So Indians, they bought 1,000 metric tons of silver and 50 tons of gold, which is 5 and 20 and 2% of annual mine production. Okay, global. Yesterday, just one day during their Diwali festival. So I'm not, culturally familiar with that festival, but it's a big deal in India. And in one day, they bought 1,000 metric tons of silver. You guys are all aware that the LBMA is in a tight spot right now with their physical silver situation. As a matter of fact, these rates at one point went up to 200% intraday, and SLV, not every day, but some days, actually, there are 0 shares available for.
And spot
That to me
silver. And spot
Sorry,
silver is
go ahead.
still selling at a premium to the futures price of silver, meaning that the LBMA issue still hasn't been resolved. There's still this small backwardation in
Yeah,
place.
I think, Danny, for that part is that futures is actually catching up. So what that means is that, the arbitrage for people to take the silver from the COMEX to ship it to London is shrinking to the point they're not making any money. So just take a step back. London is in trouble. JP Morgan seem to be shutting down like the doors for AP's authorized participants to borrow shares to redeem for physical silver SLV, okay, and also other ETFs as I'm aware of. So the ETF route is shut somewhat, well, pretty much. And I hear whispers of the LBMA leasing 150 metric tons of physical silver from the SG in China. As you probably know, if you lease something, you got to return the silver at some point. So that's a big problem in itself. If they're leasing 150 metric tons from China now. That news actually was first reported by Bloomberg, but Bloomberg didn't talk about the leasing part. Bloomberg just said that China is shipping 100 to 150 metric tons of silver to the LBMA. Okay, so back to the COMEX. So it seems that the COMEX is the only savior for the LBMA, but as you just noted, Danny, I noted, futures price is catching up to spot. So there's really no incentive for further silver to be shipped from the COMEX to the LBMA. Now, some people say, well, there still seems to be a lot of people standing for physical deliveries at the COMEX. Well, I say this, guys. If you stand for physical delivery of physical silver at the COMEX, it doesn't necessarily mean that all of it is going to London. I mean, it can just be, Wales or somebody rich or family offices or any of the above being nervous with this current silver situation, and they are taking physical silver into their own possession. Like Francis always tells me, if you don't hold it, you do not own it. So that's what I see with that situation. But back to India, with the 1,000 metric tons of silver and the 50 tons of gold that they bought, what does that tell me? That tells me that, whatever that is going to the LBMA is going to be gone within probably a few days. I mean, India just ran through 1,000 tons of silver and 50 tons of gold in one day. I think India is standing for physical silver deliveries, and China is standing for physical gold deliveries at the LBMA, and it ain't gonna stop. So whatever that is going to the LBMA is going to be drained by China and India in terms of silver,
So to
physical gold and
clarify,
silver.
so to clarify the story about China bailing out the LBMA, is it true or not?
Well, what I think of it is that it's not true. Don't use the. They are saying to the LBMA, if you guys whichever bullion bank that went to them at the SGE, right? They said if you guys want the silver, we lease it to you. So leasing it to them at a super high rate is not really bailing them out. As a matter of fact, some of my followers pointed out that if the LBMA is leasing the silver, let's say at 100% lease rate from China, I'm just hypothetically speaking, throwing it out there, right? 100% lease rate. And then Chinese companies are standing for physical silver delivery at the LBMA for that silver. In a way, the LBMA is financing Chinese companies to get silver for themselves. Does it make sense? It's
Yeah.
almost like free silver for China as a whole, right? And these deals and these contracts are bilateral, gentlemen. So we do not know the details, the exact details. So all we can do is look at the wants and needs, and also the evidence there, and we pick the most probable scenario that is happening. By the way, gentlemen, The silver prices, the Shanghai Gold Exchange and Shanghai Futures Exchange today, during the Chinese opening hours, they were actually higher than the price of silver at the LBMA. So the gap has
Wow.
closed. Yep.
Well, I wanna get into some more bullish statements from for gold and silver. This is from, interestingly enough, the U.S. Treasury, and it's from Scott Bessent saying that pretty much admitting that gold and silver were at one point. Well, gold was the primary backing of the dollar, and he said it in a very positive light. So I want to get your thoughts on this, Eric, and I'll get your thoughts as well here, Francis, as well, after Eric.
I think, gentlemen, I think Scott Bessent is a smart man. And I think by him saying this is really a signal that the US is getting ready for a US Treasury physical gold revaluation in 2026. The reason why I say that is because, of course, we all know that Judy Shelton has been saying that. She said that the US is going to launch a physical gold US Treasury bond that has the principal is paid back in physical gold, but the yield is paid back in fiat US dollars. So she's saying that that's going to be launched before July 4th, 2026. So that's what I think is happening. I think Scott is getting ready for this to happen. And I really think the US is boxed in. I mean, look at what's happening today. The US national debt just exceeded $38 trillion today. Went right through $38 trillion. And, it's almost $1 trillion right now on an annual basis.
Gotcha. Pull up the statement word for word as to what Scott Bessent had to say about gold. Let's go ahead and listen in. This is from the Tucker Carlson show.
Makes it very gold. Gold also has other applications, a lot of applications, jewelry in India, but it's something that historically people have all agreed on. And gold can't have a fiscal problem. Gold cannot have a gigantic budget deficit. Gold cannot have a war. So just the fact that it is this isolated thing makes it very interesting. And the fact that the entire global trading system, until Richard Nixon took us off, was tied to gold.
So you're not anti-gold?
Oh, no. When I had my fund, I think people might have called me a gold bug.
Okay, Francis, I want your reaction to these comments here. What do you make of Scott Bessent's comments?
Whilst on the surface he talks positively about gold, and those are overarchingly positive statements, I would counter that his actions on behalf of Americans may be contrary to these views. For example, I was showing you, and it might be worth, again, the share screen, if I can locate it, the fact that in terms of this Argentine bailout, who knows what really happened on that deal? The truth is, I don't appear to know. But some of the reports that I'm getting, and I haven't had the time to research it more diligently, appear to outline that he sold gold, we don't know, to buy Argentine debt on the basis that it has a positive yield and gold doesn't. I've literally seen a tweet with a comment stated as such. Now, did they appropriate Argentina's gold, or has that gold been sent somewhere else? There's so much capture in the system that one individual statement in a busted trade position that America finds itself is not going to have me believe that every action he takes reflects that statement. You have politicians say whatever they need to say at any given time. And we've seen Trump make some very supportive kind of comments for various things. Only to a different audience, he said something else. So politicians are talk out of different corners of their mouths. So I don't believe that I don't see any signs that America is accumulating or audited what they already have. But I do see signs quite overtly of other nations that have confidence issues. And we've got to remember that this is a trust and confidence issue in the hegemon, America, and the US dollar debt system. That is UST's treasuries, for which we just released an article on the unbelievable Cayman Islands that are actually hold 4 times more. They were already quite a substantial investor in treasuries. We now reveal they hold 4 times more. This is very much a proxy for the ex-hedge fund manager, Goldman Sachs retiree golfer set to be involved in nefarious, I would call it dark state deeds of maintaining a Ponzi in Cayman Islands. So Besson's statements might want you to think that the right man is in charge. That doesn't mean his actions are actually accumulating gold. And the information I had is they disaccumulated gold to make direct investments into failing debt assets in a known nation that regularly fails, whose debt assets keep having haircuts. What did they secure? Well, it sounds like they secured some Argentine beef, which, by the way, is very good. I'm a massive fan, along with South African beef, but is going to do damage to US-based farmers. So they've already damaged the soy farming in the United States with China's reciprocal tariffs that they're now going to have to bail out to the tune of 16 billion that are no longer profitable because their biggest buyer's gone away thanks to tariffs. Now they're doing damage to the farmers in the States on meat. So the agendas that I see coming out of this is actually more debilitating in terms of the food supply in America. And I consider that as controlled demolition of intent on food supply in America and viability. And no doubt there'll be a bottomless buyer of the farms in the form of BlackRock and various other nefarious dark state actor fascist corporations that cooperate with the dark state. So I actually find it interesting for all the other reasons rather than what he has said personally.
Yeah, and then you take what he said recently, you take it in conjunction with what he said about 9 months ago, and he said, quote, within the next 12 months, remember, this is 9 months ago at the start of the Trump 2 administration, within the next 12 months, we're going to monetize the asset side of the U.S. balance sheet. What do you think he's implying there, Francis?
For me, yes. Yeah. So with him electing to monetize, they're looking, this is all snake oil wheeler dealer stuff for a bankrupt who's suddenly getting very creative about the fact that more and more people are noticing he's going bankrupt. So I talk about the Hemingway bankruptcy curve. That is the marginal depreciation of debt and dollar until the convexity period where it goes very, very fast. And I've been suggesting that the move in gold is actually illustrating the inverse, the parabola, which is the inverse of the convexity curve, means we're in the now going fast phase. And it's amazing how an oily salesman who's going bankrupt suddenly gets very nefariously creative about how he's going to actually go to new highs. It's, the best years are still ahead. You're listening to a charlatan who's literally is keeping so many balls up in the air. You're one slip away from a major calamity. And they're talking about monetizing assets. Well, I suspect they're going to advance the dark state agenda of Larry Fink and BlackRock with tokenization. They're going to...
Uh-oh. Did we lose Francis?
Yes.
Did Larry Fink get to Francis? Well, while we're dealing with that, Eric, I'll let you expand on anything else you want to talk about in response to these comments from Scott Bessent and anything you want to respond to what Francis
the current gold.
Oh, Oh, you're back. Yeah, you cut out for like 20 seconds, Francis. So if you don't mind rewinding.
Wow, that's weird. Let's recover that. So it's me as well that's cutting out.
You cut out as soon as you said Larry Fink.
Censorship.
I'm not kidding, by the way. I'm serious.
That's hysterical. Lol Finkelstein. We cut out at that point. Okay. Let me go again. Sorry about that. So maybe just ask the question again, and I'll jump in on the back of that.
No. I just wanted to ask what you thought about Scott Bessent's comments from 9 months ago about monetizing the asset side of the U.S. balance sheet. All right, quick break here, because if you're buying gold or silver the normal way, you're probably overpaying by a lot. And that's because most retail dealers quietly tack on these huge markups, sometimes 10%, sometimes 20%, sometimes even 30%. And you don't even notice it. It's like paying $115 for a $100 bill. Doesn't make sense, right? So that's why I've been using the Bullion Standard Pro. It's a membership that basically lets you buy precious metals at real wholesale prices. The same prices that dealers get. So no inflated premiums, no middleman games. Their platform updates every 5 seconds, straight from mints and distributors. So what you see is literally the real market. And here's the crazy part. If you buy something like this gold American Eagle, here's the amount of money you're going to be saving at the time of this recording, at least. So it basically pays for itself multiple folds on many occasions, depending on what you buy. And if you want to try it out, they're hooking up my viewers with an exclusive 10% off their first month. Just use promo code COSM10 at checkout. That's COSM 10 at checkout. So if you're stacking, investing, or just tired of getting hit with hidden markups, check them out now. Bullion Standard Pro. Click on the link down below in the description box and use promo code COSM10. Now let's get back to the video.
Yes, so my overall view is this is a mad scramble to try find at the bottom of the barrel something that you can represent as an asset. This is stripping the wallpaper off the grand old hotel. When you have a bankrupt who's been in the slowly, and then suddenly very fast phase, the Ernest Hemingway curve, and you have gold doing the exact opposite, what you see is the sudden burst of creativity to try create vaporware as major assets. And I could see the American family silver being put up on the blockchain and tokenized, a la the great guidance that Larry Fink seems to be putting forward of establishing digital physical assets, which will be part and parcel of the great taking at some point in the future. I see this by piece, fractal by fractal. And you'll even be offered, even American citizens, no doubt, will be offered to buy a minuscule non-voting Satoshi of X NFT, which represents the national parks and the income it gets and the resources and all of this, all the gold in the ground that you've yet to mine. And it's kind of like, I see this effort very much like that NFT that sold for 69 million and can't get a bid for 10 grand today. They're going to, the digital art as this huge boom. I see this as the flagrant last swinging gasps of a sinking empire desperate to create vaporware assets to just.
Oh, are you still there? Francis? I think he cut out. Yeah, anytime he mentions the great taking or vaporware, he cuts out. Oh, there he is. You still there?
I'm here, guys. Sorry. It seems
okay,
like
you cut out there again for like
a lot of interruption.
Yeah. I mean, anytime you mention certain keywords, it seems like you get matrix attacked or something. So let's go to Eric here while your connection recovers there, Francis. We've got some charts here that you shared with us, Eric, and it looks like the gold is flowing out of the west and into the east, where you're at the moment. Let's go ahead and take a look at this chart of 2024 UK gold exports, and you can see. A good chunk of the exports are going to China and then Switzerland too. But go ahead and walk us through some of these charts you shared with us.
Okay, awesome. So that what you see, Danny, is essentially a representation of gold that is coming out from the LBMA. I mean, as after all, the LBMA is the juggernaut in the UK.
Mm,
So if you look the data that Nick Laird provided, which is what you're showing to your audience, and Nick is a wonderful, wonderful guy. He takes his time to compile the data and make it into charts. Okay,
mm,
so he uses UK customs data to compile to make this. Okay,
okay.
and like I said, most of this goes, is probably exported by LBMA. And I just want you guys to take note that yes, number one is China. So we all know that. We all know that China's sucking physical gold from the West. But the number two is Switzerland. Why is
Hmm.
that? Because Switzerland is where the LBMA was sent to go to so that it gets refined and recasted
Mm,
for the COMEX.
okay.
So this year and also last year, as we can see here, the COMEX has been pretty busy in sucking physical gold from the LBMA as well. If your audience recalls, like one of the earlier shows that I did with Danny, we were talking about how the COMEX is just sucking physical gold from the LBMA like no tomorrow. Earlier this year, like we're talking about, probably started last year around October, and then it really ramped up, and it reached its peak around February to April. It's still doing it. So that's what we're seeing here. Do you have the charts of the Shanghai Futures Exchange, Danny? The gold
Yes,
that I
this one.
sent you. Yes, this one. So right now, what you see here is the gold accumulation at the ICBC, which is the Industrial Commercial Bank of China. It's the biggest bank, by the way, in China. Second biggest one is BOC, which is the Bank of China. Not to be confused with the PBOC, which is the Central Bank, People's Bank of China. Okay, so they have similar names. Anyway, so the
Mhm.
ICBC and BOC, they are the biggest banks and commercial banks in China, and they're also the biggest bullion banks in China. And they operate the gold and silver vaults and the SHFE, which is the Shanghai Futures Exchange. Now, as you can see, for the longest time, the physical gold accumulation, or like the warrants at the Shanghai Futures Exchange, is around 4 to 10 metric tons for almost 15 years. And then all of a sudden in 2024, it shot up to around 10 tons. And then boom, we are at 84.6 metric tons right now. So some people, some naked short guys came to me and said, "Hey, Eric, isn't that just like people playing the arbitrage between SGE and SHFE?" Well, wait a second, guys. Wait a second. That's not it. Because if it's just like, physical gold to play the arbitrage, first of all, it won't stay in the vote cumulatively for that long. That's number one. Number two, if it's playing the arbitrage between the SG and the SHFE gold price differential, the ARB, then the VAT, which is the value-added tax, would not be exempt, okay, at the SHFE. So this is something else. What I think is happening is that the Chinese commercial banks are under the directions of the PBOC, which is the People's Bank of China, the Central Bank of China, and they are just about to launch a program where they're going to be shipping off this physical gold from the Shanghai Futures Exchange to SGE International, which is the Shanghai Gold Exchange International offshore vault in Hong Kong. Now, Danny, your audience might ask me, what's happening in Hong Kong? What's this SGEI thing?
Mhm.
Well, Shanghai Gold Exchange International is where the foreigners can participate. At the SGE, at the Shanghai Gold Exchange. That's why it's called the Shanghai Gold Exchange International. And the Hong Kong SGEI vault is the first offshore vault that China, the SGE, established. And they just, rolled that out back in June of this year. So this is pretty new. Okay. So and then some people might ask me, what the heck is going on? Why are they launching all these offshore vaults? The reason, Danny, is most likely that China is sick and tired of the U.S. weaponizing U.S. Treasury bonds, notes and bills, and China is about to launch a parallel system along with the BRICS to use physical gold as a offshore repo interbanking liquidity collateral, which is what this is, or
Right, and
or trade collateral.
they're
Yeah,
opening vaults all over the world, right? In the Middle East,
yeah,
in India, all over the globe.
correct. And Hong Kong is the first,
Hong
but they're
Kong, yeah.
doing that because if you're using gold as a collateral, the trading partners like Saudi Arabia, Russia, India, etc., they want to make sure that the gold is in their own backyard. They don't
Mhm.
want the physical gold to be in Shanghai. That's the reason. Okay.
Right.
So long story short, trading partners of China, if they are to use physical gold as a collateral for international trade or offshore liquidity in place of US treasuries, which by the way, right now is 70% of the market. Okay. So let's say we go 50-50 in the future, 50% gold, 50% US treasuries. Then the prerequisite is for China to establish these offshore Shanghai gold exchange international vaults so that the gold is in the backyards of these trading partners of China so that they have a peace of mind to use the gold as collateral doing trade with China.
Right. And then you also had a similar chart of silver exports. Go ahead and share that. So this
Yes.
shows a different story. It shows India as the primary export source of the UK.
So yeah, that makes perfect sense, Daddy. I mean, if you look at that chart, the second biggest export from the LBMA, I'm just going to say LBMA, because
Mhm.
primarily the UK export the silver and the gold from the LBMA. Okay, the second biggest one is what, the UAE. Who does the
Mhm.
UAE export like this silver for? Like get the silver, import the silver for? Excuse me. The UAE get the silver and then they put it in the silver in the Dubai, UAE Dubai LBMA hub, and then they export the silver from the Dubai hub to India because of import reasons and tax reasons. India also likes to import silver from Dubai, UAE. So if you add the top two up, the top two essentially are mostly for India.
Mhm.
India is importing in excess of 3,000 metric tons of silver from the UK, okay, in 2024. And in 2025, people are saying that, the silver the India imported from the LBMA dropped a bit, okay, but given recent events, I would guess that for the second half of 2025, India is going to catch up in this silver import from the LBMA, and we're going to end up probably around the same amount of tonnage, so around 3,000 metric tons. So that leads me to my second point, which is once the LBMA get whatever silver from China, whether they lease it, borrow it, whatever, leasing most likely, and the silver that is coming from the COMEX, there's already a buyer standing for physical delivery, and that is India. Because according to Bloomberg, JP Morgan a week ago or 2 weeks ago told India that they're not going to get the silver, you know, under the LBMA bilateral contracts until T plus 30 minimum.
Mm.
So a lot of people have been telling me that the silver coming from the COMEX and China, potentially, that's not authenticated or like verified, it's going to save the LBMA. But from my vantage point, I think it's just going to maybe help them fulfill part of their contract obligations to silver delivery to India.
I see. I want to take things back over to Francis. Francis, any response that you have relating to these charts we just looked at and China's expansion into the global repo trade, expanding into opening these gold vaults in the Middle East, in India, in Hong Kong, and certainly in other places all over the globe to compete with the U.S. Treasury market. What's your take on all this?
The people that are monitoring this are better informed, and I'll bow to Eric and others on this. But there is clear stress. I think people can get super technical and confused very quickly. And there are other people that are better informed, as I say, than me on this. But to me, there's a clear evidence of distress. So, for example, the futures market, many people get confused. So contango is a normal situation in futures markets. And it's typical that the further out contracts are slightly higher prices. Backwardization, you've mentioned it, is the opposite of contango, and it represents an abnormal sense of situation where urgent delivery is sought on the near term. And that points to distress in the market. People are having to pay a premium right now because they've got to get silver now that they've probably already sold and are being asked for delivery and don't have. So they then rush into the futures market and are demanding delivery for the near term. And what tends to happen is that problem shifts then to the following month after the expiry of that contract, because they'll be continuing to short or do whatever their nefarious activities might be, and then being called mark to market for delivery again by the same people. And Eric just referenced Diwali, where gifts are given in Indian culture, and there's been a surge in buying, and you've got this on top of a clear short squeeze as well going on, I feel, that is self-evident in the markets. And you then get another rush, and that rolls into the next month, and you'll probably see further backwardization. You saw, before all these crises, you saw lease rates go exceedingly high on silver. So all this points to is detailed that more and more people are saying, we don't trust you. If I can encapsulate, you don't have to become a master of knowing every little tick in movement in who has what, because I think there's also a lot of misinformation in that. When there is distress, they're going to try lie even more and harder. So I run the macro game. Price eventually will fix these things. And what you're actually seeing is there's a loss of faith and trust in the Western hegemony and the degree to which assets are physically backed. And what that is leading to is a rampant run on the physical item that is being requested for delivery. And that's why we've suddenly had this whirlwind of news about the LBMA and gold going to America, and more recently silver being shipped around, and these shotgun deals done with Argentina, and did it involve their gold, and all of this. These are all evidence of hustling, mad hustles. And all I can say is unobtainium comes very, very quickly, and only price fixes that. And your unobtainium can come before you get the new price discovery. We've made calls on silver that you're going to have a pause in the 90s, and then you're going 330, and then we see 600, and then we see 4 digits. The point that might occur with that is you won't get a chance to buy maybe at 55, 65, and 70. You might have a complete whiteout, call it a gap, and there's no buying, and the next open market discovery will be at the 90s. There'll be a little bit of trade, it'll be gobbled up, and then pop, you gap again. So if you aren't investing, and you aren't accumulating, and you aren't physically holding, you don't get to trade every price in between. Markets can gap in extreme crises, and you will have little spots of price discovery and potential gap. So I wouldn't sit and listen to the people calling tops, all the psyop of everybody's rotating into Bitcoin. That clearly isn't true. And all the splurge of counter narrative. I would see it all as bullish and keep stacking robustly, because we have a crisis of trust. We have a crisis of hegemony, debt, and fiat. And the parabola is already established in gold, and your job and the duty is to recognize you've married the most beautiful woman in the world. You have Giselle Bundchen as your wife. Stop looking at other girls and other investments and oil trades and everything else and Bitcoin trades and everything else. You've won. Just keep going and stay with it. And everything else that I'm hearing is pointing to distress, deception, and who really knows what's the truth and what's misinformation. But clearly, there's only lying involved and this level of stress when there is a problem. And that means you should double down on your accumulation. And that's all I take from all of this.
So, Francis, you're also seeing the likes of lithium and lithium breaking out, copper hitting new all-time highs, silver is as well. You see it in uranium. It seems like this is a commodity-wide event, a capital rotation event that the only thing that hasn't moved yet is oil. But
yeah, I would jump in when you go commodity wide. I'm pretty bullish softs, like coffee, for example, trading to new highs. You've got the Arabica bean contract, Robusta's not far from other. I'm pretty bullish soft, but I'll still say the best game in town is this is a reserve asset crisis. And we were behind the gold long oil short trade from 2019. People forget that was a rainmaker trade in both directions. And we repeated that 2019 call a year ago in 2014. We said the exact same thing is happening again. So, be careful when you say all commodities. We're in a hyper model. We look at technicals and build our economic theory based on what we see in the market. We don't get to economic theory. It's different.
Oh, did we lose Francis again? Francis, you there? Yeah, I think we may have lost him. Eric, any comments on what Francis was referring to here? Do you anticipate precious metals being the trade as opposed to a commodity-wide capital rotation events?
Well, I think, precious metals first and then commodities. But let me tell you something, Danny. This is just fresh off the press, breaking news, okay, that I'm looking at right now. Lots of chatter of U.S. forces outside Venezuela border. Maduro says air defense. Maduro says air defense ready. Trump will hold the presser. I mean, that's crazy. I think the U.S. is going to be invading Venezuela. It looks like.
Yeah, well, Venezuela has the world's largest oil reserves.
Yeah. And if that happens, I see gold and silver, like what Francis said, it's going to gap right up. And then it'll be very difficult for people to catch that bus once it does that.
Mm. Yeah, well, I think we're running out on time here, guys. And, our connections are slowly decaying over time. So I think it's best to wrap things up here while we're ahead. Guys, thank you so much for the show. I hope hope next time we do this, we have a more robust connection in place. But nonetheless, it's always a pleasure. We got some really good, juicy insights. And if you guys enjoyed this podcast, drop us a like and comment. Go Francis, go Eric, go in the comment section. Francis, I'll let you close things out here, my friend. Where can people find you? And any closing thoughts that you want to share with the audience?
Sure. The Market Sniper YouTube channel. There are links in there if you want to engage further and give us a call. We are intending to maximize this huge bull in precious metals, which has only truly begun. And for everyday stackers that think they have the primary trade, there's actually mechanisms that you can turbocharge that stacking without taking undue risk or changing your lifestyle meaningfully. That is with light, occasional leverage on unique trade opportunities. There's also the most important thing where you should be investing in securing your freedom and optionality. away from the US. We have a large US audience away from the Western world, Canada, the Commonwealth nations, Europe, and the United Kingdom, which are going to face massive downturns and huge spikes in costs of livings. And we are getting into a polarizing event for the masses. Those that took action on all these aspects I've just raised, and those that didn't. And just buying gold and silver isn't enough. The draconian totalitarian governments will overreach. They will capital gains tax. They will force tokenization. They'll do a variety of things. You need optionality. If you value all those points, follow us on the Market Sniper on X. Jump onto the YouTube channel. And if you want to book a call to have a chat about how you could not only build wealth, accelerate building wealth, preserve that capital, and secure yourself future freedoms in an overarching Bolshevik totalitarianism world for large parts of this planet. Thanks for having me on, and sorry we had some cutoffs today.
Yeah, no worries. Eric, go ahead and take us home, my friend. Where can people find you? And any closing thoughts you may have?
On X, King Kong 9888, and if they're Chinese, they can find me on Red Note. I have a pretty big size following now in China. The same account, King Kong 9888. And I urge my followers and everybody, if they do not own any physical gold and silver, it's never too late to start accumulating. And if you're afraid of, buying in at a high price, I understand that. People look at the price of gold and silver now and they're breaking new highs. People may think, oh, I'm, buying at the top. Well, if you feel that way, do dollar cost averaging. Buy a bit at a time, maybe on a weekly basis, maybe on a monthly basis, and that will probably give you a average, price that you're more comfortable with over time.
Yep, it'll smoothen out your entry point for sure. Guys, thank you so much for your time. And if you enjoyed this podcast, again, hit that like button, comment down below. Let me know your thoughts, whether you agreed or disagreed. I do, in fact, read all the comments, and I will be replying to a small handful of comments out there. I can't get to all of them, and the channel has grown immensely, and I've got to thank you guys so much for your support. But with that comes the volume. I just can't get to everything like I used to anymore. So let me know your thoughts. I will read them, though. And by liking, subscribing, commenting, doing all the YouTube stuff, you do help us in pushing this video and this channel in the algorithm. So a little bit does go a long way, and it's free. And check us out on Substack at capitalcosm.substack.com to get access to all my stuff early, ad-free, and uncensored. All right, guys, I'll talk to you guys later. Bye.